are up around 25%, and 10-year yields are up around 3% from 2.4% when you were on the show. Have you changed your views?
I mean, what a lot of garbage. Yeah, I mean,
it's not garbage.
That is absolute garbage.
This is what's happened over the last 6 weeks.
Absolute garbage. This is not an advisory show. Okay, there's no health warning on this saying I am giving advice. I am not your personal stockbroker. If you want a personal stockbroker, get a phone number, go into the directory, call the person up. To try and have the conceit to measure my insights and my performance over 5 weeks, I completely have contempt for that. Now, the reality is, I made 32% last year, okay? So, that's the reality. Now, in the last 5 weeks, we have had a rally in risk, okay? Big deal. The stock market fell in 1929. It fell in 1930. It fell in 1931. It fell in 1932. Despite that, Jeff, in each of those years, you had rallies of the order, if not greater, than what we've seen. So the case remains, I believe, that when you have debt deflation in society, one should be vigilant and one should be risk averse. And that's what I continue to be.
So you continue to stick with the themes. Nothing has really changed in principle since we last saw you?
Yes.
Okay, on that, Eric writes in and says, in terms of your deflationary thesis, do you think that a lot of it has already been priced in by world markets, since oil and copper charts are showing a convincing bottom and are improving?
I mean, again, we always say this, monkeys spend all of their time picking bottoms, okay? And I refuse to pick bottoms because I don't live in trees, okay? My feeling and my insight is that we actually overstated world GDP. World GDP was recorded as being $54 trillion, and in the US, 15 of that was American. I think it was overstated because we were borrowing. When you're borrowing consumption from the future and you're spending it today. And so there's a kind of, you're supersizing the economy like a Big Mac. Yeah? And when that has happened in the past, and again, when this debt cycle has turned, what it has revealed has been a reduction in nominal income. And that's very rare. The last nominal reduction in income was 1948, so that shows you how rare it is. So against that context, I still believe that the demand for industrial commodities will continue to prove weak, and therefore I don't see bottoms.
Okay, we'll come back, we'll talk some more with Hugh. Squawkbox Europe at cnbc.com.
Let me show you a tale of two charts. First of all is an incredibly bullish one. Deutsche Bank up 5% yesterday, up 55% this year. Wahey, I hear you all saying, look at that stunning outperformance. And I'll show you another chart which might make you more sober on this one. Deutsche Bank down 43%, underperforming the DAX over the last 12 months. Which is more accurate, given the fact that we have a lot of news out of Deutsche